Hello, everyone. Welcome to the panel on turning financial data into insights. Today, we are going to talk about how financial data can be turned into valuable insights. As a bit of background, financial data is a growing industry that follows in the footsteps of the big data movement. Big data has taken the world by storm, growing quickly into a $31 billion industry with 14% year-over-year growth for quite some time now. A study by Accenture found that a whopping 84% of businesses believe that a data analytics strategy is key to their competitive edge. Right now, we are seeing big data being used in the financial services industry, first in the realm of algorithmic stock trading and quickly moving to other parts of the industry. It is now being used in lending, insurance, customer support, pricing, KYC, and much more. Today we have a great three-person panel. I will now introduce the panelists to you. First, we have Keren Moynihan, who's co-founder and CEO of Toronto-based Boss Insights. Boss Insights is a company that uses big data and artificial intelligence to accelerate the process of making loans to SMBs. She has a JD, an MBA, and a psychology degree, and she's worked across the financial services industry as a commercial banker and as a wealth manager. Keren's goal is to make capital markets more efficient. She believes that data is the Achilles heel of bias, and without killing your bias, capital markets are going to miss out on a lot of opportunity. I'm excited to hear more about that, Keren. Next up, we have Lori Weir. Lori is co-founder and CEO of 4 Eyes Financial and is a Lean Six Sigma black belt and also chair of the Canadian ALS Society. 4 Eyes Financial is a Canadian regulatory technology company that unifies and provides insights into financial risk data. 4 Eyes helps wealth management firms with regulatory audits by aggregating the financial data generated from communications between advisors and their clients, and acts as a solution for efficient pre- and post-trade regulatory compliance. Obviously, wealth management firms have a massive and unique trove of data on client interactions, so I'm interested to hear more about the insights you're able to generate. Lori.
Nice to be here.
Last but not least, we have Clayton Feick, who is Chief Revenue Officer at Flinks, where he leads the company's growth and expansion mission. Clayton comes to Flinks with a long history in the financial data realm, working at companies like Thomson Reuters, Quandl, and NASDAQ. Flinks is a financial data company that lets businesses connect their users with the financial services those users want, offering services to businesses across digital banking, lending, payments, and more. For full disclosure, Flinks is a portfolio company of Luge Capital, where I sit. Clayton, I'm very excited to hear more about your insights on financial data.
Thanks,
so
Rob.
During this panel, I want to talk about 3 different topics. First up, the transformation of the financial services industry to one where financial data is more accessible than ever. Second, let's hear more about how financial institutions and fintechs can proactively structure their business to create and take advantage of financial data. And third, let's hear how it works in practice. What are the cutting edge ways that fintechs and incumbents are now generating insights from financial data? So for each question, let's make this as interactive as possible. Panelists, if you have comments or questions, feel free to jump in. Let's first start with Keren, then go to Lori, and then Clayton for the first question. What are the new types of data that is available to financial institutions and fintechs today?
Okay. Hey, Ramin. Hello, everyone. So amazing to be here. I feel like we're really connecting. So there's 2 things, right? There's access to new forms of data, and then there's gathering the old types of data, but just doing it a little bit better than we have been. And a little bit better means not PDF attachments that you have to go through, but access to the data in a way that you can use it instantaneously. What we have is a system where if you're a business and you're asking for a loan, you're sending your financial statements with a PDF, and then someone has to review them. Or you can actually connect to cloud-based accounting systems and have the ratios instantly provided. And that's when you're deciding on the loan. It's also when you're renewing the loan. But in addition to that, a really exciting form of data, which is not looking at where your business has been, is gathering payments, third-party payments information. So why that's exciting is it doesn't tell you where a business was, it tells you where the business is right now. So that's one piece of exciting information. And if you can gather sales information on a company, then you know where the business is going. So you don't have just the past, you have the present and the future.
Thank you. Over to you, Lori.
So in our business, we're working with financial institutions, investment firms, broker-dealers, and we are not pulling in necessarily new sources of data. However, we're looking at data that's always been available in a different way. But in terms of, I think an interesting way to think about old data and looking at a new way is when an investor does a risk tolerance questionnaire, and that is used as part of KYC process, it really only captures a moment in time for that investor. And if they've had a bad day, you know, their sports team loses the night before, you know, they didn't have their coffee, whatever it might be. I mean, these point in time data collection experiences don't really give us a true view, for example, of a client's risk tolerance. So if you can pull into that experience actual behaviors that a client has done throughout their investing career to layer into that risk view, that adds a whole lot more interest, depth into the view of the risk tolerance of that client. So I think adding behavioral outputs over time is an interesting, which we can capture now because so much work is done digitally into the assessment process that is, and layering on top of old data that we've had before, that adds new insights for sure.
I think that's really interesting. Sometimes it's that the data always existed, but now you're using it in a different way.
Exactly.
Over to you.
Yeah, thanks, Ramin. And very pleased to be here as well. Just to kind of pick up on what Lori mentioned, I come from a capital markets background, and you know, I think data has always been prevalent in the decision-making process because typically it's being used to make investment decisions. But you know, when I moved into kind of the banking world now with Flinks, it was really shocking to see the opportunity for the use of data to drive decision-making in a number of different processes. So I think kind of the banking and lending industry still has a ways to go to catch up to, say, more traditional capital markets firms. And what we're seeing is this sort of new network of data that's being built from the ground up, which is all kind of consent-driven from the individual. So an individual now can choose to share their data in a lot of different use cases in order to power some type of financial service, get access to something they may not have had access to before. It really opens up this new world of possibilities for the individual, but also for new types of financial technology firms or Fintechs that are serving that individual. And that's what's really exciting about what we're seeing is through kind of the digitization of financial services, the amount of opportunity that new types of data and how that data is being used, a new opportunity that's been opened up for firms and individuals.
I think that's exactly right. The existing financial institutions do hold a wealth of financial data on their customers. Keren, you've said that banks must adopt APIs or the fintechs will win. A quote like that without context can be a dangerous thing. Give us some context on that statement.
We presented after PPP the argument that if you wanted to provide loans to businesses, and perhaps I'll give a little context on PPP. Typically in the US, there's 15,000 financial institutions and they're lending in 15,000 different ways. So if we're going to offer data, we better do it in the way that they want to lend, the way that they're approved to by regulation. Here you have access to one style of lending and 5,000 FIs were using that one style. And the winners of PPP, I think largely it's agreed that they were the community banks and the Fintechs. They really got it together quickly. The community banks offered personalized service and the Fintechs had access to APIs. So we presented those statistics and we also showed that data and digitization, they weren't really a top 3 priority in 2019, but it's 2020. We're all sitting here like this now. So there really isn't another way to go. FIs have to decide whether to buy, meaning work with an outside provider, or whether they're going to build internally. And so we presented that to the financial brand and they've splashed it on the front page with that heading. So I owe Jim Marus a thank you card for that. But what we're really saying is that a bank is an expert in regulation and they're offering incredible financial products. And I don't know that they're celebrated enough. It's not a simple task. However, data has now become an asset class. Banks have always been sitting on information, and we've been saying things like data is the new oil for quite some time. It's not actually true, though. I think the more accurate statements would be that insights are the new oil. Those APIs get you access to insights. You're not just sitting on information on your customer, but you can tie it to the product they need the minute they need it. So that's what we meant. And to bring it home, Square closed $820 million in new loans during the PPP timeframe, and 60% of that was new business. So I think that's the most shining example.
Fantastic. Turning over to Clayton and Laurie, any comments on that?
Yeah, I could just pick up on this idea that the banks have all this data available to them. I think that more and more banks are realizing the opportunity to not only get access to other data, but share the data, and it's almost counterintuitive in a sense. I think many banks for a long time thought that the closer they could hold on to the data, the closer they could hold on to their customer. But now we're seeing that banks are actually thinking the other way in many cases, where they want to allow their customers to share their data, because at the end of the day, the bank is central to that customer and kind of powering all these different services that may not necessarily be core competency for the bank. So I think for a while, the banks kind of maybe struggled to understand where they fit into this new sort of data ecosystem. But I think now they're starting to see the benefits of not only accessing APIs and data that's external to power their internal processes, but being forward thinking and understanding the possibilities in allowing their customers to more easily share their data. I think ultimately it benefits them, and it benefits the kind of new data ecosystem as well.
From our perspective, I think we may be a little bit different in our business model. We work with broker dealers and investment firms and wealth management firms at the enterprise level. And so we are actually, in order to drive our digital services platform, pulling in data and actually have built proprietary schema to analyze that data and produce insights from it. And so we know that legacy systems are an issue for large financial institutions. And so our approach with our clients is to say, if you want to drive a particular insight, these are the data sets that you need to pull in. And so we work with them to create a data lake specifically built for purpose around what it is they're trying to achieve from a business perspective. And we drive insights directly from connecting the book of record data. We pull in AML, politically exposed persons data. We pull in all kinds of different data depending on what it is we're trying to achieve from a dashboard perspective. And this sometimes seems challenging at first conversation with our prospects, because they may have embarked on a cloud strategy or creating a data lake that, you know, was a project that took 3 to 5 years and produced no results. And when we work with our clients, we say, this is not a data strategy. This is an outcome that you're trying to produce for your firm with real tangible results. Now let's create a data lake built for purpose to achieve that end. And on the other another stream of thought on that is from the end consumer perspective, in the investing public, we do have a client portal where they engage with their advisor through that portal. And so we're able to collect individual investor information through that medium that, again, is driven by the governance standards and business strategy of the firm itself. And so I think I certainly agree with Keren's comment earlier that, you know, we all know there's no lack of data. And to some extent, there's lots of information out there, but what is lacking is insights. And, you know, insights come from a combination of automating processes, but also adding machine learning and AI onto those things. But ultimately, in the investment world, it also requires judgment from human beings to layer into that decision making. And so we sort of look at data and say, yeah, the data is kind of the nuts and bolts, and the insights are leading, but they're not the final decision maker in the experience that our client has with the solution that we offer.
Thank you for that. I think what's really interesting here is we're agreeing that the use of financial data can lead to better results for the businesses that use them and for the customers of those businesses. When we look at any business, knowing that business's customers is their superpower. In an open finance environment, financial institutions and fintech apps can really use their consumer financial data to better understand their customers and grow smartly and efficiently. But as you say, the adoption can be difficult, and it's been slow to date. So far, we're really seeing just the digitization of existing in-person customer experiences. So let's talk about it a little bit more tangibly. In your opinion, and Clayton, we'll start with you, what are some of the most exciting positive outcomes for consumers when their financial service providers integrate financial data into their products?
So I'd have to agree with Keren's quote there around insights are the new oil. I like that. We find that from the fintech or the consumer's point of view, the consumers being the ones that use the data, it's very difficult for them to weed through all the data that's accessible. So for example, an individual's banking transactions for the last 12 months, how do I get insight out of that? So we've developed a library of, we call them attributes, which is essentially data enrichment. So you can pull insights really quickly out of an individual's financial data in order to drive a decision. So for example, as a lender, you may want to understand if this individual has had NSF checks or what their income is, what they spend other money on. Again, this is all driven by the consumer. And to your question of what the benefit is to the end consumer, the end user, it's if that individual needs a loan quickly, or they're applying for an auto loan or a mortgage, whatever it may be, that decision can be made more accurately and more quickly. And what that means is they can get access to the service they need. So that's part of it. It also might mean that it opens the door to new types of services that are now available to them because the provider has access to data that allows them to better adjudicate someone, or build a better proprietary model that allows them to offer that service. So the benefits, I think, are only positive for the end consumer. Again, it's all driven by consent. So that's kind of the advantage of them sharing or choosing to share their financial data.
You know,
Keren, over to you.
Oh, what's interesting about this is that I think we have about half a bank here on this panel, because we have personal services, we have wealth management services, we have a venture arm, and we have business lending. So I feel like we're almost there. There's, and I guess I wanted to bring that up because I don't know how you feel about it, but the way I feel is that the banking industry is a little bit backwards, where the customer has to know what product they want, and they have to come prepared to almost sell to the financial institution that they should get that product. But I can't think of another industry that works that way. And one example is that we're often, if you would look at our banking transactions as our company, you would see that we have a huge need for foreign exchange. But there's no bank approaching us. Our bank certainly isn't. And when I proactively asked them about foreign exchange services, they recommended me to TransferWise. I think that's a little backwards too. The use of data or the use of insights would be instrumental in letting the bank be in the position to be the consultant, the relationship manager. That was my title when I was a commercial banker. I was a relationship manager, but truly it was a very manual position where I had to gather information, get the key insights to see if a business was available to get a loan, and then send it off to the credit department. Find out when that business needed other products and get a specialist in there. But we've all built platforms that can tell the bank exactly when that is from the information that we see. And what's left is for the bank to just proactively be there and funnel that client through. It's just reversing the trend a little bit. I think that's how we really position banks to be that provider going forward in the future. The advantage, we said that APIs are required or fintechs will win, but where banks have an advantage is it's a really full service offering. So if they have access to these insights at the right time, if they have on-demand access, they can be that service provider that they want to be to delight the customer.
Fantastic. Lori, over to you.
Sure. In terms of how it benefits the consumer, our focus originally with our company was it was a business to consumer application. And what we focus on now is actually starting at the firm level and kind of working through different multiple layers of perspective from the advisor to the client. Ultimately, our mission hasn't changed since we moved from B to C to B to B. And that mission is we exist so that investors feel more confident that they're invested in the right product as it relates to their risk and their financial goals. And so every insight that we provide is connected to that ultimate objective. And so there are all kinds of different pieces of, often it is simply just information, not, like mind-blowing insights. But even being able to view this information is new and unique for the investing public. So, for example, being able to do a pre-trade analysis on your existing portfolio with your advisor real time and to see how adding or taking away certain investment products changes that portfolio according to your goals and your risk is very dynamic and informative and creates all kinds of interesting conversation between the advisor and their client. In addition to that, pulling that information up into the ongoing compliance and monitoring of accounts from a trade surveillance and supervision and general suitability compliance review. First, you get fewer exceptions and alerts at the head office, and you're able to capture and actually look at not just trades, but actually look at them in the context in which they were made. So this enriches experiences not just at the consumer level, the general and retail investor, but also in terms of the people working inside the industry and how their day looks and how much more productive it can be and where they're focusing their energy and time doing things that are higher value activities. And so that they can be using. Yeah.
Because I'm thinking about an example where the price per earnings is way out of whack. Let's say Amazon, right? The multiple is so high. And then anyone holding stock would want to know, what does it look like if I sell now? What does it look like if I keep? Are you saying that you're doing that? That's incredible.
So the pre-trade that we're doing is really less about, because advisors don't really want to get into necessarily having those kinds of conversations every day with their clients.
Yeah.
But it is around portfolio asset allocation more than about individual. I mean, yes, we can do individual securities, but it's really about, if I trade this ETF or fund or, this handful of securities, how does that really affect my overall allocation versus, someone who's really into looking at, the performance of the exchanges.
Got it.
Although you could do that for sure, but like 80% of the population is, to your point, they don't even know what they're buying, and
it's discretionary mostly, right? What do you say?
Yeah, but this comes into a whole other conversation about, what at the compliance level are advisors understanding the product from a know your product point of view. Are they eligible to sell the products that they're selling? And then, is the client actually suitable for the product? If the advisor is selling a product that they're eligible to sell, is it the right product for that client? And so these are all things that we're also monitoring at the head office compliance level to aid in helping to bring confidence to the whole experience. And this adds to the retail investors' confidence in the whole investing ecosystem.
That's fantastic. So we've talked about what is financial data, what types of financial data exist, how financial data can be used for the betterment of companies and their customers. But we brought up an interesting point. Keren, you mentioned earlier that this year Square issued $820 million of US PPP loans. That is a tiny, tiny fraction of the several hundred billion in PPP loans that were issued in total. So we've got a bit of an adoption issue. We found that companies that leverage data to drive decision-making gain a competitive advantage and can offer a better product to their customers, reducing business costs and increasing their own profit at the same time. It seems like a win-win-win. But how can those companies structure their operations proactively today in order to make better use of this financial data and incorporate it into their flow? Clayton, we'll start with you.
I mean, there's so many different use cases. It's hard to really focus in on one. I think the general theme of efficiency and any sort of paper process that you might have had in the past that needs to be digitized, or any sort of manual process would qualify. We've certainly seen that over the last 6 months, when different financial institutions and governments at all levels have put in place programs to help with the pandemic, a lot of institutions or firms that were helping to administer those, realized that there was a lot of problems they had because most of their processes were not digital. So we would encourage anyone who is thinking about how they might be able to incorporate data into a digital process to come and talk to us about all the different types of use cases, because I think when you understand the type of data that's out there and you start to mesh it up with all the different processes you have, it can really open up a lot of opportunities in places where you might never have thought of in the past. So that's what we're seeing in some of the conversations that we're having with our clients. I'm sitting here drinking my my Canada Dry, and we're based in Montreal and Toronto, but we've expanded in 2020 into the US, and it's been really exciting for us. We've built a team now across the country to better understand some of the challenges that American lending institutions are having, and helping them further digitize their processes. So it's great, and we're going to continue to build on that in 2021.
Fantastic. Keren, how can businesses proactively structure their operations to take advantage of financial data?
So we're sitting in a very exciting time. I think the three of us would have been proving the need for digitization, and now it's more about answering the question of why we're the ones to adopt in our category. What I would say is it's actually the banks who need to structure this, not the businesses themselves. They simply have to enter information into their accounting software or enter information into their sales and HubSpot. And if your company has a chief revenue officer like Clayton, you'll be definitely doing that. So they'll have the information required. But when I'm talking to a bank or a fintech or a credit union offering business data, what I'm telling them is that they can continue to spend 85% of their time gathering this information manually, and then having 15% of their time go towards what the mandate is, which is to grow a healthy loan book and to cross-sell. Or they can really just rejig that and in under 1 minute sign up for something that will give them information in real time. And what we've seen is an increase in loans processed up to 50%, a digitization 90%. So what does that look like? You have instant insights on your customer. You have instant portfolio health, and you're able to identify through the accounting information when they need another loan, simply by looking at things like accounts receivable. You can identify from having access to their payments when money is coming in, when they'll need to process those payments or when they'll have deposits. And as we're sitting here in a interest rate environment that is maybe not as healthy as banks would like, they are all looking for ways to offer other services to banks. The other thing I'll say is that when you're looking at a business, banks are also looking at the individual. So having access to personal data through incredible companies like Flinks, it really helps the situation. They're evaluating the business, but they're also evaluating the person. So I think what we're going to see going forward is environments where there is one place where you go to aggregate your source of information on your customers before you pull it into your loan operating system. That part hasn't really been identified or solved yet, but I bet there will be a lot of discussion about it going into 2021.
That's great. Lori, you work with businesses that already have the financial data that you want to work with. How can they better structure their operations to use the data so that you can come in and help them gain insights from it?
Well, this is a question that I face every time we speak to a new prospect. So I hope I'm the answer, because we have a digital services platform that we have proprietary schemas to collect data from all kinds of sources, from accounting to the book of record data to CRM to AML types of data. Like data is data, so wherever we're pulling it from. And that proprietary schema currently today runs millions of transactions through our analytics engine, and we produce dashboards and views for 3, and now we're moving up to upwards of 5 different roles in the organization. And I think that everyone here has said, and I agree, if you have a data field in a PDF form or residing in all of these different systems, whether it's accounting or the AML group or global sanctions or people who are doing trade surveillance or whatever the functions might be, there was a time when you had an endpoint solution that captured the data, that held that data hostage inside that database, and it was impossible to create relationships between those sets of data to produce insights. And so therefore the Excel spreadsheet industry boomed, and everyone started, getting their data and pulling it and just manually twisting and turning it and making it do what they wanted it to do. And we realized that we built this powerful platform that would enable all kinds of different insights and for different perspectives. But job one for us was to really tackle the data issue. And so our team members come from a big data background, and we said, you know what, we are in the technology platform business, but we also are in the consulting professional services. Get your data lake started and running so that you can actually drive the innovative solutions that actually exist. And so we meet with functional representation from across the organization, from advisor services who are looking at their client portals, to folks in finance that are doing monitoring like credit risk and margin calls and all kinds of things of that nature. Compliance, who is constantly trying to find ways to scale compliance as new regs come up, and I know in the US keep changing. So how do we build a system that is built to change versus endpoint solutions that are built for a point in time? And so we help them and support them in creating data lakes so that they have that data collection one time. So if I'm onboarding a client through digital onboarding, that data gets stored in its individual way and can be used for a multitude of different purposes to drive insights, whether that's for finance, for advisor services, for compliance, for the advisors themselves in the field, or for clients. And clients can actually get insights into their financial future from an investment perspective from data that actually is used at the firm level and at the advisor level. And so I think that we all understand that making data relational is the key to getting insights. The more different types of data that you can bring together, relate it to an individual and relate it to a set of variables, the more powerful that's going to be.
That's great. It looks like we're almost at time, so I will give the panelists each 30 seconds to give some closing thoughts on this important topic of turning financial data into insights. Lori, let's start with you.
I think I'd just like to close off saying that I've not seen people embrace data and the idea of getting insights more than I have in 2020, and I'm sure that will continue in the future. And think about building a system that is built to change, that is adaptable, agile, and flexible, and that you do capture your data once and use it for multiple purposes. Invest in making data relational, and invest in what you want to do with that data 5 years from now, not what you want to do with it today.
Great. Clayton?
Yeah, I think the audience primarily is lending institutions, banks, financial institutions, providers of capital. I would leave the audience with this. In the past, I think that your competitive advantage or core competency may have been around providing capital, and today that's no longer the case, because capital is abundant and it's very cheap. And so because it's everywhere, you have to differentiate some other way. And to us, it's do you have a better way of getting customers? Do you have a proprietary model that allows you to protect your capital, like better credit risk analysis, say, for example, than your competitors? Or do you have a better experience for your customers in providing that capital? And all three of those are very data driven. So I think the only way to compete in this world of abundant capital is through better decision making that's data driven. And we'd love to speak to you about that.
Fantastic. Keren, close us out in 30 seconds.
Okay, so bridging on top of these very excellent points that the other panelists made, I'll say that every day 8,000 businesses are walking in and asking for loans and getting declined. And they are not all declinable businesses. It has to do with the immense amount of manual work. And even if they're not appropriate for loans, they'd be great for deposits and cash management. So what's the answer? Remove the manual work and really adopt automation. These companies, we've all figured out how to get you onboarded in minutes, if not weeks, no longer than that. So there really isn't a reason not to test it out in order to compete with your peers, because if you don't fill the vacuum, others will, and they are already.
Thank you.
30 seconds.
Just getting the hook from side stage. So thank you very much to all of our excellent panelists. That's all for now, and I hope you've all learned something about turning financial data into insights.
Thank you, Ramin.
Thank you.
Thank you, Ramin.
Clayton.
Thanks, Keren. Thanks, Laurie.